Nvidia and Palantir Technologies are two of the most talked about companies in the artificial intelligence space, and right now they are often seen as the giants of this sector. When you put the two together, their combined market value is about $4,700 billion. That is an enormous number, and it shows just how much investors believe in artificial intelligence and the role it will play in the future. However, there is a strong argument to be made that Amazon could actually surpass that combined value before the end of this decade. If that happens, it would completely shift the landscape of the biggest technology companies in the world. At the moment, Amazon has a market value of about $2,300 billion. In order to reach a valuation of $4,800 billion, Amazon's value would need to grow by more than 109%. That level of growth would not be easy, but it is certainly not impossible. If Amazon achieves that growth by the year 2030, it would mean that shareholders could enjoy average annual returns of roughly 16% during the next 5 years. For long-term investors, that type of growth would be highly rewarding. The reason this scenario feels realistic is that Amazon has already been showing strong progress across its main businesses, and it is positioned extremely well in industries that are only going to keep growing. Looking at Amazon's latest financial results gives us a better idea of why this confidence exists. During the second quarter, Amazon reported revenue of $167 billion, which represented an increase of 13% compared to the same period a year earlier. That type of revenue growth for a company of Amazon's size is impressive. The company also managed to expand its operating margin by 150 basis points, which means it is running its operations more efficiently. On top of that, Amazon's net income under generally accepted accounting principles rose by 33% to $1.68 per diluted share. These numbers paint a picture of a company that is not only growing sales but also improving profitability at the same time. The momentum is likely to continue because Amazon has leading positions in 3 industries that are expanding quickly. The first is e-commerce. Amazon operates the largest online marketplace in both North America and Western Europe, measured by gross merchandise volume. According to research from Grand View Research, retail e-commerce sales could expand at nearly 12% per year until 2030. Since Amazon already dominates this market, it will be in a strong position to benefit from that growth. The second major industry is digital advertising. Amazon is the third largest advertising technology company in the world and the largest retail advertiser when you look at revenue. It is also ranked as the 4th fastest growing advertising technology company worldwide. Analysts expect digital ad spending to rise about 15% annually through 2030. Because Amazon already has an enormous customer base and a treasure trove of consumer data, it is in an excellent position to capture a bigger share of that growing advertising market. The third industry is cloud computing, which is one of the most important growth drivers for Amazon. Through Amazon Web Services, often shortened to AWS, the company operates the largest public cloud platform in the world when measured by infrastructure and platform services spending. This is a massive business because nearly every modern company relies on cloud infrastructure for data storage, analytics, and artificial intelligence applications. Industry estimates suggest that cloud computing sales could grow about 20% each year through 2030. Since Amazon already holds the top position in this space, it will continue to capture enormous opportunities as demand expands. If Amazon simply keeps pace with the growth rates in e-commerce, digital advertising, and cloud computing, its revenue could increase at a yearly rate of around 13 to 14% through the end of the decade. But what makes the story even more compelling is that Amazon's earnings could grow faster than revenue, largely because the company is leaning heavily into artificial intelligence to make its operations more efficient and profitable. Amazon has already built over 1,000 generative artificial intelligence applications designed to improve efficiency across its retail business. These tools are being used for a wide range of purposes, such as optimizing inventory distribution, forecasting customer demand more accurately, and making last-mile delivery more efficient. The company also recently unveiled an artificial intelligence model that helps its robot fleet move through warehouses more quickly and safely. In addition, Amazon is developing another model that will allow warehouse workers to interact with fulfillment robots using natural language, which could completely transform warehouse operations. On top of those efforts, reports suggest that Amazon is working on humanoid robots to assist delivery drivers. At first, these robots could take packages from delivery vans to customer doorsteps while the driver waits in the vehicle. Eventually, this process could become fully automated because Amazon is also testing autonomous ride-hailing vehicles through its Zoox subsidiary. If Amazon manages to integrate humanoid robots and autonomous vehicles into its logistics chain, the company could drastically reduce delivery costs and speed up shipping for customers. Artificial intelligence is also being applied outside of logistics. Developers at Amazon are using a coding assistant called Amazon Q Developer to handle repetitive programming tasks. Chief Executive Officer Andy Jassy explained that this tool has already allowed the company to migrate more than 30,000 Java applications in just a few months. This saved Amazon an estimated $260 million and freed up about 4,500 developer years of work compared to traditional methods. This kind of productivity boost shows just how transformative artificial intelligence can be for Amazon's bottom line. Industry experts are taking note as well. Brian Nowak, an analyst at Morgan Stanley, has argued that Amazon is one of the companies best positioned to gain significant financial benefits from the combination of artificial intelligence and robotics over the next 3 to 5 years. He highlighted that about 36% of Amazon's retail sales are currently consumed by shipping and fulfillment costs. If artificial intelligence and automation reduce those expenses, Amazon's profitability could expand dramatically. From a valuation standpoint, Amazon shares are currently trading at 34 times earnings. While that might sound expensive compared to some other companies, it is considered fair when you account for Amazon's expected earnings growth. Analysts estimate that Amazon's earnings will grow about 18% per year over the next 3 to 5 years. If the company meets those growth expectations, its market value could climb by 109% to about $4.8 trillion by the end of 2030. At that point, Amazon's valuation multiple would decline slightly to 31 times earnings, which suggests the company would be more valuable but still reasonably priced. If this scenario plays out, Amazon in 5 years could be worth more than the combined current values of Nvidia and Palantir. That would be a major shift in the stock market and would further solidify Amazon's place among the most influential technology companies of the era. Between its e-commerce dominance, advertising growth, cloud leadership, and artificial intelligence-driven efficiency, Amazon has all the ingredients needed to become one of the most valuable companies in history. Essentially, Amazon, which is currently valued at about $2.3 trillion, could potentially surpass the combined $4.7 trillion market value of Nvidia and Palantir by the year 2030. To achieve this, Amazon would need to grow by more than 109%, delivering average annual returns of roughly 16% over the next 5 years. The company is strongly positioned because of its leadership in e-commerce, digital advertising, and cloud computing, all industries expected to grow at double-digit rates through the decade. Recent results already show strength, with revenue rising 13% in the second quarter to $167 billion, net income climbing 33%, and operating margins expanding. Additionally, Amazon is leveraging artificial intelligence to cut costs and improve efficiency across retail, logistics, and software development. With analysts forecasting earnings growth of about 18% annually, Amazon could reach a market value of $4.8 trillion by the end of the decade, making it more valuable than the combined worth of Nvidia and Palantir today. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.